investors in real estate, the stock market, cryptocurrency, and early-stage businesses. Now your host, chief noisemaker, and wise woman herself, Audrey Bell Kearney.
Good evening, and welcome to another edition of Wise Women Invest, another episode. Good evening, Carolyn.
Good evening. How are you?
I've been busy today, Carolyn. I ain't gonna even tell a lie. It was a busy day. I have been downloading classes, so I'm excited about that. I had two big meetings this morning, and I just had a busy day, and it was so crazy because I had to actually stop and make a list because I felt like I was scattered after all of the meetings. I felt like I was scattered, so I said, you know what? Let me just stop. Let me make a list. Let me put things in order, and when I did that, I was fine. So now I'm just ready to eat dinner, and then I'm going to relax for the rest of the evening. How was your day?
Oh, busy. In fact, I just got off a webinar with a bunch of ladies, and I was like, I gotta go. They kept asking questions. So I've been in training sessions and webinars all day today. And I'm so excited because I love the fact that so many people are just taking a whole new look at where they are financially and learning things and we're helping people. Audrey, it's just amazing. You know, I think you were on one of those sessions when we're talking about people who have millions of dollars in the wrong place. You know, so we're helping to educate people, and so it's been a busy day. I've been doing a lot of that from training and implementing all day today.
You know, it's so funny because I decided to go take a look at Wise Women Invest, the club site, and two new people joined in the last 2 days, and I was like, holy crap. And it was crazy because I was like, why didn't I get the notification? And I think the platform changed so that it knocked the email out, but thank God it was only 1 day. So I went on there and I said, hey, nice to meet you guys. Welcome to the community. You know, if there's anything I can do to help you, please be sure to fill out some of your information so we can get your pre-financial assessment done. And so that was pretty interesting. But it was after that call, something said, hey, check the website and make sure, you know, nobody's new in the community. And there were two women. One was from Arizona, and I think the other one was from North Carolina. So that was pretty cool. I was like, okay. So that means that our message is getting out there, Carolyn, because we do this show, and this show is broadcast. Right now, we're streaming live on Facebook, LinkedIn, YouTube, Twitter, Roku as well. So we're streamed all over the world at this point. And so our message is getting out there to people because it's really important. It's really important that you get your financial house in order. And I know for me, I'm big on education. So being able to educate women about money and how to position themselves so the money can work hard for them is, you know, like really important for me. So I'm so glad you take the time. I know you're busy, and it's so funny because my husband, he said, so he's been home all week because his car is in the shop. And he said, I can only clean so much and see all the work that Carolyn is doing, because every time something happens, he gets the group me alert, and he's like doing it. It's hilarious. It's hilarious, Carolyn. So he's been cleaning because his car is in the shop. He's like, okay, well, I might as well do this. And so I said to him, do not touch my towel. That's the third towel today you have washed. He goes, oh, I didn't even realize it. Yes, it's the third one. Please don't touch my towel. So anyway, thank you for being here, because I know you're busy, and I really appreciate you coming on to help me educate the women about money and investing. So tonight we're going to be talking about mutual funds. Last week, if you missed last week's episode, we talked about stocks. Today we're going to be talking about mutual funds. Next week we're going to be talking about bonds. Well, I don't know. Next week, bonds next week. I was thinking about the holiday. Are we going to be the holiday? Next Wednesday. I'll be traveling.
Yeah, there may be a lot of you decide, just let me know. I might be traveling, but
me
just
too.
let me, yeah, we can probably skip next week if that works for you.
That works for me. So we're gonna skip next week, y'all, because I'll be traveling too. So I will be on the highways and the byways and the flyways traveling for the holiday weekend, and I'll be back. I'll be back in business on Monday. So we're gonna skip next week. The following week, we're gonna be talking about bonds, and we're just gonna keep this train moving because there's so much for you guys to learn. And if you ever want to do a private work session with Carolyn and I, please be sure to, go to Wise Women Invest Club right there. That's the free community. There's no charge to be a part of that community. Go there, sign up free, ask your questions. You can get access to the free financial needs assessment there. And you can also set up a consultation with Carolyn or myself. So be sure to go to wisewomaninvest.club for that. All right, Carolyn. So mutual funds. A lot of people don't know what a mutual fund is. They hear it. All they think about is stock. They think they're going to lose their money, and fear just kick in. And so, what is a mutual fund?
Well, I'm glad you asked that, Audrey. And let me just share before I say about a mutual fund that you are so right that one of the reasons why a lot of people don't invest, and let me say this too, that we have found over the last decade that more and more women are getting educated. They're getting the education on how the market works, how these types of vehicles work, and they are actually taking part and putting money there. And that's an awesome thing. I think you've heard me share so many times that Maya Angelou always said, when you know better, you do better. And so these sessions are helping women to know better and to do better. I'm so excited about that. But a mutual fund is a financial instrument made up of pools of money collected from many investors that invest in different things. Most of the time, one of the most popular mutual funds is an equity fund, and that is investing in stock. One of the awesome things, there are over 20,000 mutual funds in existence. Thousands of them. But most people think, when they start thinking about investing, number one, that they may lose their money. And that's a realistic thing in some places. We'll talk about that. Some people have always thought that it costs too much, but you can actually get started in a mutual fund for as little as $50 a month. Isn't that amazing? And just think, so many people below $50 a month. I was talking to some young people the other day, and they were asking me how much, and I said, let's just talk about the money that you blow. And one young man said, oh yeah, I blow $50 in a couple of days. And the one guy said, yeah, give me a Saturday night and I would have blown $50, just going to one of my spots. And so what a mutual fund does is allows you to these pool assets to work for you. For example, let's say that you were investing in an equity fund, which is one of the most popular, and probably most of the funds that people invest in is equity. And that's a mutual fund that's investing in the stock market. Every mutual fund some of them have more, but the average is 150 different companies in one mutual fund that your money is being invested in. So let me ask you, Audrey, what's the likelihood of 150 different mainstream companies like Amazon and Facebook and Netflix and Google and Kroger and Victoria's Secret and Kroger and Publix and 140 more? What's the likelihood of those 150 companies going out of business the same time, the same day?
Carolyn, is not likely. And I think that's what makes mutual funds so attractive to a lot of people. But I want you to just kind of clarify something for me. And for those who are watching, you said there's an equity fund, and then is there another fund?
Oh, there's lots of them. I said the most popular one is one that has a portfolio of stock. Okay. And that's the equity. You can also invest in a mutual fund it's called a fixed income fund. That's basically usually has a set rate of return. Whereas when you invest in stock mutual funds, that's going up as the market's going up. And so it's more aggressive. So there's a greater chance that your money is going to grow a whole lot faster for you when it's in a stock mutual fund. But there's a fixed index fund where it's actually investing in corporate bonds or government type vehicles. So typically that's a fixed rate of return. And that's for people, Audrey, who say, you know what, I am not interested in losing money on any level. So I want to make sure that I do something that's conservative and something that is safe. And those people are going to invest in a fixed income fund instead of investing in a government fund. There's also a bond fund. A bond mutual fund that's investing in bonds or municipalities, which means they're taking advantage of debt instruments from various types of, like if there's roads being built, hospitals, that type of thing. There's also what's called sector funds, which means these are for people. And when I say there's a mutual fund for everybody, you can find a fund for everybody. There are sector funds. And these are people that you may have an investor who's, like I had a young lady about a month ago, and she said, okay, I want to invest only in gold and precious metals. That's a sector fund. So I had to go research what funds could I find for her that were doing very well, that was investing in gold and precious metal, because that's all she wanted to do. And I said, so who told you that? Well, that's what my uncle or somebody. And I said, okay, I'm going to do this for you, but I would advise that you do diversify your portfolio a little bit more. So mutual fund does give you diversification because you have so many companies in there, but sector funds actually put you in a certain area. And so you want to diversify your portfolio so you don't have all your eggs in one basket. The other sectors, or there are people who say, you know what, I only want to invest in healthcare, or I want to invest in technology. And there are technology funds out there that all they invest in is technology. There are funds out there that is only investing in healthcare. There are funds out there that are only investing in municipalities or in just sector. Main Street sector, this is all I want to do. So yes, you can have funds like that as well. And then there are funds that's called what's called balanced. And that's the type of fund that's invested in both. It has a little bit of government vehicles in it. It has a little bit of equity in it. And it has some sector funds as well. And there are people who say, I want a little bit of everything. I don't want to be in one place because if something happens in the technology industry or the healthcare, I want to make sure that my money is working for me. And, sometimes I've shared with people this too, that one of the things over the years that I've seen, one of the greatest population of growth in our country was the baby boomers, Generation X. And sometimes when you follow what these mass groups of people are doing, that's where, because what baby boomers right now are turning 65 and they're somewhere between 50 and 70 where they're getting ready to retire. So their healthcare, the healthcare is really important to them. So if you think about that market, young adults are into technology and being able to get into Facebook and all. That's a huge population of people. So that sector is going to do very well. So you have the balanced accounts, you have the fixed accounts, you have equity accounts, you have bond funds. Am I missing any? You have ETFs. You have ETFs as well, which are exchange traded stock. So you have those different types of mutual funds that a person can invest in. And it all depends, Audrey, when we try to make the selection or recommend to someone where they should go, it depends on what type of an investor they are. They may be conservative, they may be middle of the road, or they may be an aggressive investor. We would not put an aggressive person in a bond fund. They would be like, what is going on? This is like watching grass grow. You've got to put me someplace that's kicking. But for a large number of people who don't have an appetite for mutual funds or an appetite for the market or just getting in, then we typically try to get them pretty much diversified so they actually get to experience what it's like. Unlike just being able to just go buy stock or just leaving your money in the bank, your money earns money 3 different ways when you invest in a mutual fund. And when we talked a little bit about that last week when we talked about stock, but when you invest in a mutual fund, your money earns money 3 ways: through dividends, and that's when the companies in the fund declare a profit for you, the shareholder; capital gains, when they make a profit when they move companies in the fund; and appreciation, that's the value of your shares increasing over time. So and that's why you get such a better rate of return, because your money is making money for you in 3 different ways. Unlike at the bank, where you make money one way, and that's interest. They declare it, and in most cases, it's less than 1% these days, isn't it?
That's right. That's right. So, Carol, I wanted to ask you a quick question. So, when it comes to these sectors, right? Because I like that, the sectors. if I want to invest in the tech sector, and all I can possibly afford right now is $50 a pay, so $100 a month to put in that sector. Is that enough of an investment to put in that sector, or do I need to have more money to put in that sector because it's aggressive, or is it not aggressive? Is there like a a slightly aggressive and then a super aggressive tech sector? How does that work?
It is considered aggressive. It could be less depending on what sector we put it in. But $50 a month is typically for our beginning investors. I say $50 is better than zero. Mm-hmm. So people either invest on a systematic basis where they say, okay, I'm going to invest $50 a month, and they do it every single month. There are people who invest from $100 a month. I mean, my largest client does about $5,000. I have one that does $10,000 a month. So it all depends on how much money you have and how much you want to do that. And then, or you could do systematic, which means periodic. So you would do whatever the minimum is for that fund. So let's say one of the sector funds say you can open a fund here, and the minimum, if you just wanted to put money in and not do the monthly drafting, then the minimum would be like $1,000. So you could literally start investing with $1,000 and then let that grow and then put in extra money periodically or whenever you want it to. And then the third way is through just a total lump sum, where someone may be transferring money from someplace else, or they have $10,000 or more that they've earned, or they have it in a checking account someplace. Well, they can take that lump sum and invest it as well into a sector. And it all depends on which sector it is in terms of the volatility. If it's in technology, that's considered aggressive, can be volatile. If it's a sector in healthcare, then that's typically not as aggressive as investing in the stocks. So it all depends on a person's, I always say their thermometer. What raises your temperature? What makes you get upset? Do you hear if the market's going down or the market's going up? If you don't get phased a lot and you understand that investing is for long term, then we can help you find a sector that's going to be good. And Warren Buffett always says that find something that you're spending your money in already anyway and invest in that, or find something that makes you tick. You may say, okay, I'm going to invest in fashion. I want to invest in a company that's investing in all of the companies that are making clothes, or I want to make sure that I'm taking care of investing in technology. There's so much happening with the tech guys, with Microsoft and all of those companies. You can do that. You just have to know that some of those sectors are going to oil. There's oil. You can invest in oil. I was trying to think about that earlier. This person called me and said, I want oil. I want to be in the oil sector. So some of them are more aggressive than others. It's all a personal, because we do that profile, Audrey, on everybody to determine what's the best plan for them. It's not cookie cutter. We literally do customized assessments for every person, for every woman. And I'm so glad you do that, to help determine what's the best vehicle for them. What's their objective? What is their long-term growth? Do they have the emergency fund set up? Do they have the retirement fund? What is the objective? And the objective for investing should really be for the long term. We don't typically ask people to go into the market if they want to bring it right back out.
And I'm glad you said that, because I got to tell you a quick story. So I was talking to someone last week, and they were getting advice from a friend who did some investments, right? So they sent me the friend's stock market account information, sent it to me, right? And so in the stock market account information, he had $118,000. Mm-hmm. And so he had told this person, like, listen, you can make this kind of money too. You just got to invest $1,000. And I said, $1,000. So I'm looking at it, and I kind of glanced at it. I kind of didn't pay any attention, right? And so the person went, they took the money, they got ready to go to TD Trade America, I think it is, or something. Mm-hmm. One of those things. and they were about to do it. And I said, hey, wait a minute, let me take a look at it again before you make the investment, right? Because that person I know does not have the temperature for aggressive investing. They don't have the temperature for no investing, really. Like I've talked to them plenty of times about investing. So the simple fact that they were even thinking about it and did not come to me to even set them up, I was like, wait a minute, hold up. So when I looked at the actual screenshot that they sent me, it was actually that person. It was penny stocks. Let me say that. The person had bought 5 million shares of penny stocks. It cost him $117,000. What he showed the other person was when the stock went up, he got to 153,000. But that particular day, the stock had dropped and it was at $118,000. And so I said to him, so listen, you're not going to invest $1,000 and get $153,000. I said, take a look right here. He has 5.2 million shares of penny stock. And so that person was like, oh no, let me get my money out. Right. It was hilarious. It was so funny because I know them personally and I know their temperature for investing aggressively is not like that. And so he's like, no, let me get my money out right now. So he thought he was literally going to invest $1,000 and in 1 year have $153,000.
Wow.
And I was like, no, it doesn't work like that. I'm sorry. I wish it did because I would be like super duper crazy rich, but it doesn't work like that. So you really do have to know your temperature when it comes to investing. And here's the other thing. Don't listen to other people because what he did not tell that person, I invested $117,000. He thought he invested $1,000 and got $153,000 return. And I had to look at it again. I was like, no, look right here. 5 million shares, penny stock, so it was a whole nother conversation. But I said all that to say, you really do need to know your temperature. You really do need to make sure that you're okay with losing money, right? Because that's a possibility. And if you're not, then you're going to think that everybody in this space is like crooks and criminals and they told you some wrong advice. Nah, you didn't go to a professional. You went to somebody who kind of not, they weren't really honest is what they weren't, because they invested $100,000 and they're telling you to drop 1,000 as if you're going to get to that level of income in a year, which is not the case. And because I knew what I was looking at, I was like, no, that's not going to happen. Sorry. I wish it could happen for you. I wish it could happen for me as well, but it's not going to happen.
And I'm so glad you said that, because that is so true. And it's not, and you tell people that up front that, there's a risk. We can put you into something that would minimize your risk. Again, depending on what your temperature is, you follow. But sometimes if you're willing to not be so upset about the return, if you're willing to leave it there long term, then you're going to reap the benefits of that. As I said earlier, the market has averaged over 10% over the last 50 something years. And most people have not invested in them because they didn't know about them. There were two other types of mutual funds that I missed when we were talking about the types, and that's international and global. The international fund, and when you do a blended balance, you can get all of that mixed in, but you can also invest internationally. An international fund invests everywhere except the U.S. That's international. It's investing in other countries, but not the United States. Or you can have global funds. So a global fund, so international fund is everywhere else besides the U.S. And then global is everywhere, including the United States. So you can actually have global funds as well, where you are taking advantage of some of those incredible tech companies that are growing abroad. You can take advantage of that. And there are some awesome companies, very similar to U.S. companies that grow. Just think about their economy grows just like our economy. The only difference that you think about when you're investing internationally or globally is that sometimes your portfolio could be could you see some challenges based on what's happening in that country or what's happening politically. So always keep that mind, because politics do play a little role when you're investing internationally and globally. But it is an opportunity for you to get very, very diversified and really have your money grow for you.
I gotta tell you another story, and this is another funny story. So,
You're getting like me, you're telling stories, Audrey. I love it.
Because they're coming to me, Carolyn, because I kind of feel like people need to know. So some years ago, it had to be about probably 15 years ago. My mom met this woman. I don't know, some kind of way she met. And the woman lived out in like Michigan or Kansas somewhere. She lived way out. We were in Jersey, and to this day, I don't know how my mom met her. But every Monday, she would get on a call, and it was called the New Beginning 88 call. And she would get on this call, and she would always be talking about like investing in corn, investing in grains, investing in all these things. And it was all these elderly people on this call with all this money, Carolyn, and they were trying to invest in these things. One particular night, she said to my mom, we're building out this platform, and a courier is going to come to your door from FedEx, and he's going to drop off these things called dinars, right? And so I had no idea what they were talking about. So my mom, she's like, okay. So my mom believed in her, but it was a whole bunch of elderly people who were looking for places to invest money, and she had them going. And so she said something about dinars. Fast forward, probably 7 years ago, I'm home. Someone said to me, Audrey, you got to get these dinars. And I'm like, what are they? Like it's Iraqi money. In Iraq, the dollar is going to revalue, and you got to get them. And what I do, Carol, I run out, me and my mom, because my mom had heard about it. She's like, I heard about that long time ago. So we go out, we find this place, we buy these dinars, right? Because they told us, it's going to revalue at $3. The dollar's going to be worth $3 in Iraq and all this kind of craziness. So we bought it. My mother bought $100,000 worth of dinars. I bought $100,000 worth of dinars. Cost us like $113, right? We was like, well, we can't go wrong with $113. So you get $100,000, I get $100,000. So we both had $100,000. And we were like, if it revalues, we're gonna have $300,000 each. Okay, that's us, trying to find some way to make some quick money. Now, I said all that to say there are some people that I know right now, Caroline. They have millions and millions and millions of dollars of dinars, and they still buy them. And I said to my husband the other day, I said, listen, they need to look at another financial investment tool, because those dinars are never going to be, they're never going to revalue. They said the Vietnam dollar has never revalued. It's still worthless. And I said that dollar is not going to revalue, because we're going digital pretty soon. Like, we're going to be pretty much, by the time that it's time for that thing to revalue, we're going to be all digital. And so there are so many people out there who really want to invest in something, but they want to invest in something that's quick, fast, easy. No such thing. And so they have put all of this money. I'm talking about, when I tell you millions, Carolyn, they have put millions into, they have millions and millions of dollars of dinars, and they're waiting for it to revalue so they can go get on this private jet and fly to Vegas. It's a whole community. It sounds crazy. There is a community of these people who are waiting for that dollar to revalue, so they can all meet up in Vegas and plan out. They have a hotel, they have everything planned out, not to gamble, but to figure out what they're going to do with the money now that it has been revalued. Wow. It's crazy. It's nuts.
Well, that's a great opportunity for you, Audrey. So you can teach them how to diversify and get their lives together.
But Carolyn, they're afraid. Like, they're not afraid of that. And I think it's because they can hold it in their hands. Like, so what happens is, when you buy the dinars, FedEx really does come to your house with this package, with this money in your hand. So I think for them, it's the fact that they can hold the dollars in their hand. Even though we're in America and they can't spend it nowhere, they still get to hold it in their hand, and they invest money every single pay into this money that's never going to revalue. And so I've been talking to my husband, like, listen, they need to sit down with us. They need to let us talk to them about this thing, but they're afraid. And I don't know how to help them not be afraid. So any ideas on what people could do so they don't have to be afraid of investing in the stock market and in mutual funds?
Yeah, as I said earlier, education is such the key. And I think that our sessions are so simple Of course, we'll go into deeper when we're with an individual to help them understand fully. But education is the key, and have them actually see that they can make money, that they can invest in places that they can see, they drive by every single day. So I think it's the education, Audrey, that's going to helping them to see that, look, there's Publix right there. Publix is inside your mutual fund. You're driving a Ford, that's in your mutual fund. There's a Toyota, that's in, and where they can actually see the companies that are there. Coca-Cola, you're drinking a Coke right now. That company is in your mutual fund. So I think as we continue to educate on a very simplistic way, in a very simplistic way, to help them see that when you're investing, that you're actually investing in places that you spend your money, places that you go to, places that you can see, I think it will help. And then at some point, getting them to start with a little bit. Some of my clients that have been with me for years were very timid and very afraid when they first got started. And now some of these young people who have gotten older now say, oh, Miss Carolyn, thank you so much for teaching me. So once we teach them on this simple basis and help them understand that when you invest, and as we said, we're going to talk about all the different ones, but one of the things that I love about mutual funds is that you have liquidity, which means if they want their money, they can get it. It's not a whole bunch where their money is so far away from them that they can see it on their computer every day, Audrey. And if they want it, they can get it. So it's very liquid. You can sell instantly. So there's no real bogged down format to that. And I think that helps them. They're diversified. There's over 150 companies their money is being invested in. So a lot of diversification. Minimum amount to get started. $50 is really not a lot of money to get started, to start investing. And it's professionally managed. These guys have been who manage these accounts on Wall Street for years and years and years. So it takes some of your headache away, because you don't have to determine what companies are put in the mutual fund. You don't have to determine when companies need to be sold out of the mutual fund. They're professional managers who do that. And that's one of the awesome things about investing. So when we educate to them and show them just the simplicity of it, and then showing them that they can actually take advantage of all of those things with the minimal investing, I think will help them get over some of that fear. It's repeated education, though. It's not just the one time. For a lot of people, I have to remind them over and over and over until they settle in that, this is long term. This is not a put and take account. You don't put it in there and take it out the next day, but you have an opportunity to have your money grow for you.
I'm working with a client right now, and she has a staff of about 20 people. And one of the things that she wanted to offer her staff was a financial education classes. And so I'm going to be putting together some trainings in 2022 to make sure that because she pays a pretty fair wage, like in her industry. She pays about $3 above the industry rate. So that's one thing. So that was a perk. And she was trying to get people to come work with her in her company. She has a staffing and a training agency. So she trains people, and then she puts them to work, which I think is great. But she also wanted to, she came to me and she said, I need your help. And I said, listen, you got to take care of the whole person. And for me, the whole person is providing them with a good job, but they also need to know how to invest some of their money too. So the money is working for them while they're out there working hard and in a dangerous industry at that. While they're out there working hard in a dangerous industry, which you can never know what's going to happen, they need to be protected. One of her officers was actually on location at his post, and someone shot at him, and so that could have went way, 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 way wrong. Thank God it didn't, but. I have to ask, does he have life insurance? Does he have investment accounts? Luckily, though, this particular guy is already in the financial industry. So he has all that stuff set up. But all of those guys may not have that. So I'm going to be training on that type of training on those things moving forward to help her team, make sure that they're safe and not only at work, but financially as well, the whole person. And I think that's pretty cool.
That is cool. That's awesome.
Yeah. So, Calvin, I know that there are a lot of companies out there that offer services, right? It's many. How does someone decide which company to go with? You know, because I know that there are people, and I give you a prime example. I have a friend. She has been with the same company since 1997. Now the company has changed them around a lot, and so every time they move them, they have to move their money. So the money is just kind of going to these different companies. And she says to me, I don't know what to do with this money. But she's one of those people that's so afraid to like touch your money, period. Like we've talked, and I think I've talked to you about talking to her. She's just afraid to touch the money. But what she said to me was, it was in, I want to say it was in, I forgot which one it was in, but now it's in Fidelity. And so those people, the money just kind of moves with her. She doesn't know what it's doing because she doesn't look at it. She just know that when a company moves them around, the money moves too. How does one know what to do with that money, and which company to roll the money over to? Like, what's the steps with that? Because I know for some people that's like very scary. Like, okay, I got this money, it's sitting there. I've never looked at it, and now I need to do something with it.
You know, Audrey, it actually boils down to the person that they talk to about that, who has the ability, who's licensed and certified to help them not only establish funds, but also roll their money over into something that works for them. It really comes down to a matter of trusting your advisor, literally. So if these are people that you have a relationship with and it's someone that you know, that person should allow you to help based on your relationship, because you have something, one, you're not going to damage or hurt the people that you know and love. People that you have, whether that's a business relationship or professional relationship or familiar or family relationship, you're not going to mislead the people that you love. And in most cases, people stay because they've become familiar with the person that they talk to. I've seen that, but on the other side, I've seen people, because they don't know anything, they don't know what it is, they leave it where it is. I worked with a client just last month. She's been in a particular fund with this company for 15 years. Now, we just met last year because I actually did transactions with her brother who referred her to me. And so it took us a year. You know, I'm really working with her on getting her debt taken care of. And then we started talking about her investments. And so in her case, it was 15 years of from being familiar with the person who set up her initial account. Mm-hmm. Did she know anything about the account that she in? No. But I find that these people move their money and trust the process if it's someone that they know who has their best interest, a person who cares about them before they care about the money they're going to earn when they do that. So this young lady, when I started, I said, let me see your investment portfolio, to where she finally got to a point where she showed it to me. And I said, congratulations, you've accumulated a little bit of money over this 15 years, but let me show you something. And I showed her right there in her account, where the account that they put her in, that the person who opened up the account, she earned 1.34%. There were 4 other accounts available in their portfolio. One of them had averaged 7% over the last 15 years. One had averaged 12% over the last 15 years. One had averaged 6% over the last 15 years. And I showed her what she would have earned had she diversified, even if she didn't put 100% in any one of them. I showed her where her account could have been thousands, hundreds of thousands of dollars more than what she had. And she was like, wow, I had no idea. I said, I understand that. I said, but now that you know better, what are you going to do about it? And so she's allowing us to roll that money over for her. So a lot of it has to do with educating the person, helping them to understand that you have their best interest at heart, and that you are not going to steer them wrong. And they buy the person more than they buy the company. You follow? So they would buy you as the financial advisor more than they would buy the company.
Yeah, and I think for, that's really important, because and this is somebody that I know them personally, and I know that they have that temperature like the other person, like, oh my God, like, I don't know if I want to do this thing, I don't know. So because they're very conservative, the two of them, they are super duper conservative. And so I'm going to talk back to her again, though, because I think that she's ready to make a location move, which means she's totally gonna have to roll it over, because she's gonna leave the company, which is pretty cool because she's been there so long. I still don't believe she's gonna go. Thank you, Josephine, for listening to the show. We have to do more to educate people about, the possibilities of building wealth, and being able to leverage all of the tools that are out there right now. Also being able to create passive income flow while they work, but their side hustle or their job or whatever it is they're doing, because there are a lot of side hustles out there right now, Carolyn, and they need to be not just spending the money just to blow it, put it into something that's going to keep making them some passive income as they continuously to work hard. So thank you, Josephine, for joining us this evening. All right, so listen, we are about out of time, Carolyn. So I want to thank you again. Listen, guys, we won't be here next Wednesday because we'll be traveling for the holidays. Hope you have a wonderful holiday. Remember, I know, listen here, I might drop in just to remind you guys not to go crazy on Black Friday or Cyber Saturday, or no, Small Business Saturday and Cyber Monday. Not to go crazy, because I know a lot of you are just waiting. I'm not one of those. I'm not a Black Friday shopper. So I don't go crazy. But I might just drop in just to remind you not to do that. So Carolyn, how can people reach out to you if they want to reach out to you?
Oh, great. That's a great question. My office number is 404-844-8110. That's 404-844-8110.
All right, I'm going to put this up there. 404
844
844
8110.
All right, and this is Carolyn's number.
And they could reach either of us through your Wise Women Invest as well.
Yes. Please go join Wise Women Invest. It's a free group. We're gonna be doing some amazing things in 2022. So make sure that if you are interested in learning how to invest, that you make sure you join our community. We're going to be bringing you a lot of education there. We're going to hold your hands. We're going to make sure that your financial house is in order. It's important. I was talking about this on my Good Morning Gwinnett show this morning. So I had credit cards. I never had a lot of credit cards. I had 6. I had 4. And I have 2 that have balances on them. And so my credit score jumped like 61 points. And I was like, yes, like my credit score is almost like bam, way up top. And I'm like, yes, this is amazing. So, those are the type of things you're going to learn being a part of the Wise Women Invest community. You're going to learn how to get out of debt. You're going to learn how to, set your family up for wealth. Not just how to buy insurance and bury somebody, but how to leave legacies. There's a video going around, Carolyn, and it's a pastor. It's a really powerful video. He started naming like Rolls and Royce, right? Like I watched the History Channel, so I know all these people. Rolls and Royce, though, there were 2 men. Wells and Fargo, that was 2 men. 2 men. He named Rolls and Royce, Wells and Fargo, Versace. He just started naming all these names, and he said, "You're wearing people's name, and their families are reaping the benefits." And I'm like, that's so true though, because Rose was a man, Royce was a man, Ford was a man, Birdseye was a man, Kellogg was a man, Post was a man, CW, all these are people,
all of them, yep,
all of these are people, and we are wearing their, eating their legacies, wearing their legacies. Now it's time for us to create our own legacies. And so that's what Carolyn and I is doing. We're trying to educate you so we can create our own legacies, and people can be wearing our names, eating our foods hundreds of years from now on Mars. I'm just kidding. Well, I may not be kidding. Maybe on Mars 100 years from now, eating all that stuff. I never know. You never know. But anyway, Carolyn, thank you so much for being here. And if I don't get a chance to talk to you before the holidays, you have a wonderful, wonderful holiday.
Thank you. The same to you and your family.
All right. Thanks so much. Listen, guys, that's all we got for you today. We'll be back again not next week, but the week after next, to bring you more of Wise Women Invest strategies. So be sure to tune in. Until next time, my good friends, until next time, make it a great day. Bye, y'all.
You've been listening to the Wise Women Invest podcast. Tune in daily at 6 p.m. for a new investment tip to help you make smart money moves. To learn more about Wise Women Invest and to join our community and investment club, go to www.wisewomeninvest.club. To never miss an episode of the podcast, download the Wise Women Invest app from the App Store and be sure to share the show with another wise woman. Again, our website is www.wisewomeninvest.club.